Hey everyone, welcome in to another daily editorial here on the KE Report. Corey and Chad here chatting with Jordan Roy-Byrne, founder and editor of the Daily Gold. Now, Jordan, look, let's start off with the gold price and the move that we saw at the tail end of last month, November. Gold closing the month and the week a day later at all-time highs. And then even on Sunday night, Monday morning, it ran up a bit higher, has reversed, but is still holding above that $2,000 level from more of a long-term standpoint. Less so short-term trends, less so some of the day-to-day movements, but long-term, how significant is it that gold did close the month and the week at all-time highs?
Well, it's significant because, and I'll start with quarterly charts. Quarterly charts are more significant than monthly. Monthly are more significant than weekly, which is more significant than the daily. So if you're charting something, what you want to do, just generally speaking, is start off with, what's the structural, like really long-term trend. And you can get that from looking at a quarterly or a monthly chart. And so, we have a convincing monthly breakout where I believe the close was at 2058, where the previous all-time high was in July at 2009. And then aside from that, there's something like in 7 of the last 8 months, gold had tested 2000, but failed to close above it. So what that tells you is 2000 is going to be support on a very long-term basis. So the close above 2009, again, which was 2058, I mean, that's a really convincing breakout. I believe the weekly close was 2089, whereas the previous resistance was 2025 to 2028, kind of that level. We also had 2000 as a key level on the weekly chart, and 2000 on a quarterly basis. We'll see where gold is at the end of December. So 2000, or I think it's 1985 to be precise. So you look at all these longer term charts, and they're all telling you that, well, at least 2000 was resistance. Now it's going to be support. And so you had convincing breakouts on the weekly and the monthly. That tells you that the path of least resistance over the longer term, or on a monthly basis, and we're thinking about the next 2, 3, 4, 5 months of closes, the path of least resistance is going to be higher, and probably much higher since we're at a new all-time high. And the 2000 support, that tells you on a weekly and daily basis, that's the support level that the gold market could test. But that doesn't change the fact that you've had this really significant breakout on a weekly and monthly basis.
Well, Jordan, just to that point, you're pointing out that there's a significant breakout on a monthly and weekly basis, which there absolutely was. But when you visit a lot of the chat forums, and when you look at people that are honed in on the precious metal sector, let's say, they're already crying in their beer because gold has reversed down so hard just this week from some of the highs it even got into up above 2100 on Sunday night. And they're not looking at the big term picture. They're looking at these short term moves. But in contrast to that, Corey and I have talked to a couple of generalists that have actually become a little more constructive on gold just from the standpoint of what you just outlined from the longer term picture. So maybe just speak to how sentiment plays into this. And is it a good sign that the generalists are more interested in gold now than people that follow the gold space more closely?
Yeah, that's an interesting point. Well, the generalists have not been in this market to the degree that so many people are and have been in recent years. The precious metals sector has been in a secular bear market since 2011, and gold breaking away from 2100, when it does, is going to signal the start of a new secular bull. And so that's been a long time, and gold bugs and investors in the sector have been beaten down for so long that for their psychology to significantly change, and for them to actually feel there's a real bear market, they're going to need to see significantly higher prices. And every little pullback on the way to 2,300 gold, 2,500 gold, and $28 silver, $30 silver, and then $35 silver, every little pullback along the way to those people will feel like torture, and that this is just a signal that we're still in a secular bear, and gold is still in the 3-year cyclical bull that it's been in. So the psychology or the psychological change is going to be a lot more difficult for investors in this sector and gold bugs versus generalists who have not taken losses and been in this sector for years and years. Therefore, they're able to think more rationally and clearly about this. I think if you go back to even the stock market, you go back to that great breakout in 1982, most people still disliked or hated stocks in the early to mid 80s, even though the stock market was beginning this super secular bull market. I mean, it took a long time for people to really start. I mean, the masses, generally speaking, for them to really start liking stocks again. So it's going to take longer than we think for gold bugs and investors in this sector, for their psychology to really shift and align with the new trend in the sector.
Oh, and fair enough, though, right? The gold bugs, they do like to feel sorry for themselves. And unfortunately, one thing is that a lot of these gold bugs, they're invested in the gold stocks, and the gold stocks have not made them money. But for gold, if they've bought in gold at any time over the history of markets, well, they're at all-time highs. So again, it's kind of that nuance, and it all depends who you talk to. But on to the stocks, Jordan, because that's where the gold bugs focus. When we look at GDX, GDXJ, it was a pretty, possibly, let's say, significant move higher in kind of the second half of November as they finally stopped putting in lower highs and lower lows. And now we've had a little bit of a pullback in GDX, GDXJ. They've come down right to what was old resistance levels, could be support levels. So GDX right around 30, GDXJ right around 36 to 37. What are you watching on these charts in terms of potentially having some more momentum to the upside for the underlying stocks finally?
Well, to answer your question, the last weekend, I was looking at breadth indicators for the Huey, GDX, and GDXJ. I have my own breadth indicators for GDXJ. And these breadth indicators were essentially showing that, you had a really good short-term overbought condition where you essentially had 100% of the, just generally speaking, you essentially had 100% of the stocks were above the 20-day moving average, 100% were above the 50-day moving average. And, the percentage above the 200-day, I think was like 70 or 80%, depending on what you're looking at. So I went and I looked at historically in the last 10 plus years, what were similar points in these indices? And basically the similar points signaled that, you were at a, bit of a short-term peak, but the larger question is, are we still in a downtrend or bear market, or are we in a bull market? And I think we're in a new bull market. And so given how overbought that we got is actually a good sign that this strength is going to be sustainable and that you're going to eventually see higher highs that follow a correction that we're clearly in now. So the fact that we got so overbought so suddenly, that really doesn't concern me. That kind of strength. Look, you're in a bear market or downtrend, that's a sell signal. But at the same time, when you're in a new bull move, it's a signal that, okay, it's a correction, but we want to be buying on weakness now, because you don't typically see that much strength. Or I should say, when you see that much strength, it's a signal that this momentum is going to carry to higher prices after the correction is over. So I know that's a kind of a complicated explanation, but that's why breadth is so important. And then looking at the support, you had the miners obviously broke out from these head and shoulder bottoms. Looking at GDX has support at 30 or 29.50. It's trading at 30.57 right now. GDXJ has support, depending on how you look at it, maybe 36 or so. It's trading at 37.63. So you could see some backing and filling here for a couple weeks. But I like the price action. And, I think with respect to gold as well, most of the price damage has probably already been done for this correction. That doesn't mean it's going to turn right around and, go straight up here in the next week or two. But I think we're on a good path, and, we'll see higher levels after this correction runs its course. Maybe it needs a couple more weeks or a month.
Well, Jordan, there also was some positive things in the sense of Newmont, Barrick, Agnico Eagle actually outperforming GDX and GDXJ over the last couple of weeks. Do you think that portends to some generalists, as we alluded to earlier, finally deciding, yeah, maybe I'll take a stake in some of the gold stocks, and they're not going to jump into junior mining stocks. They're not going to get into drill plays or development stage companies. They're going to start with the largest, the most liquid, the companies with dividends, something like a Barrick or a Newmont. Do you put any weight on that, or do you think it was just some excessive move from those bigger stocks catching up after being so oversold?
Great question, and not to go back to my breadth indicators, but I think the money that has come into those names, I mean that's a part of my larger thinking here, that the breadth indicators are showing the kind of strength that you typically see in a new bull market. So I think obviously we want the larger stocks to outperform because that's a signal of more money coming into the sector. And so I would say I think that's what the strength in those stocks reveals, rather than a typical catch-up move. I mean, you can have catch-up moves, but at the same time, you do want to see these breadth indicators and momentum indicators really get triggered. In other words, at the beginning of a real bull market or a real bull move, I mean, you want to see strong, really strong breadth, really strong momentum, because that signals that there's going to be a lot more behind this movement coming. And so, the less technical explanation could be the one that you offered, which is, we're seeing these key bellwether miners really outperforming, and that could be a signal of more money coming into the sector, and also more generalist money, because look, if we're going to have this real bull market here in gold, and obviously gold stocks, you need more money to come in the sector, and it's not more money coming in from the people who buy juniors. It's more money from Wall Street and generalists and these various funds. So that's why that's important.
Yeah, fair enough, Jordan. We do need some of the bigger money guys to come into the sector, and some of those volume spikes were encouraging. Again, though, let's just see some more momentum to the upside. It's been a very fast move in gold in a lot of markets and in the gold stocks just in the second half of last month. Now, maybe a little consolidation needed for another leg higher, but I know a lot of people are just watching to see where this current pullback comes to. And again, it's just so early on that it's hard to tell where it's going to stop out at and what the true trend is, but at least it does look like there's been a turn, and hopefully for all the gold investors and all of us holding some of these gold stocks, it is a more sustainable uptrend, because boy, oh boy, there's a lot of catching up to do for these stocks to where the gold price is. Jordan, thank you as always for your time. We'll chat again with you next week. I hope you have a great rest of your week.